Hello and welcome to another technical analysis tutorial. In this tutorial we want to talk about descending triangles. I already talked about ascending triangles on this channel. The descending triangle is again just the opposite of that, similar to ascending and descending wedges, but it's still worth making one video on it because the descending triangle is one of the most reliable continuation patterns in a downtrend. And you have a chance with these triangle patterns to get into a trend very early, allowing you to make more profits. So first of all, as with the ascending triangles, you normally have a horizontal line as a support. In this case, when we talk about ascending triangles, it will be a resistance line, but here we have a horizontal support line. I want to show you two examples here. The first one, we have the upper, that higher line here, which is a support line. There was a support here, resistance here, and further below here, further over here. So what you have with a descending triangle then is one horizontal support line, and you can basically define a resistance line which is coming from above, like a diagonal resistance line. So we are trading in this between these two levels. What it essentially is, what happens between buyers and sellers is that at the moment when that is the case, the buyers, they cannot push the price higher. You can see that we're actually coming from an uptrend here. We had a strong peak. That was actually the first heads up anyway. You had a strong rejection by sellers up here. The price couldn't be pushed up higher. That was pretty much like a fake out or something. And then we couldn't make a new higher high. So that was the second heads up, and then we were moving to lower highs. So you could already understand that we were moving into a downtrend, and because you had this support level here, this horizontal one, you could start to define a descending triangle. And what was happening here then is that the buyers just couldn't get the price higher anymore. The sellers still had problems to break below this support line. And what then normally happens is something like another attempted breakout here, where we try to get close to that level, couldn't really, but also the buyers couldn't push the price away from that horizontal support line anymore. And then essentially we had the breakout here. So essentially that was then the defining moment. We had the heads up already of lower highs, and that we couldn't really make a new high here. So we're starting to get into a downtrend. And then again, a very reliable trend continuation pattern that then shows you that we were starting to get and stay below that horizontal line, which was then flipped as from a support to a resistance level. There was something like a retest here, couldn't really get back in, and then we dropped. And even though there was a strong buyer support then here again, we couldn't get back above this level anymore. So that was the beginning of that downtrend, which continued, by the way. And let's take a look at a second example. So let's go to the next example. We have an example here. There are actually, we've got another example here. So another support line here at 135, pretty much. You can see that here it was support here, it was support here, it was support here. And what we can see, we had the same situation where the price was coming down from here. We couldn't make higher highs, so make higher low, another lower high, sorry, another lower high. Then we came onto that level. We started to make higher highs again, but we couldn't really get above that swing high again. So another rejection, and then this was like the last final heads up we needed, and we could draw that triangle shape again, that descending diagonal resistance line. You already had the horizontal support line, and the last heads up was probably here, and probably here, where really we had one attempted breakout, we failed, but then the price was even again another lower high. And that is what generally happens. You make just lower highs, and the buyers couldn't really push the price away from this horizontal support line anymore. And then we had the breakout. We even tried to get back in but failed, and then we continued actually. At some point we managed to get above actually, but we still had that breakout, and it was a little bit like a fake out here, but anyway, it was a breakout to the downside. So could have made some profit here, at least, quite a bit actually, from 135 down to $1. If you had recognized that we had reversal here, that V-shaped recovery, but you definitely would have made some profit had you traded the breakout here, or even the retest at 130 roughly. And even had you, failed to exit your position here, you would have exited it probably here at the point where we didn't make another lower low, and you would have made some profit from 130 down to 112, probably 115 or something. So definitely good opportunity. Again, you never trade these before the breakout. Again, no financial advice, but you never trade a breakout before a breakout happens. It just doesn't work. Breakout traders always wait for breakouts to happen, and then potentially even a retest of that former support, which is then flipped as resistance, and then you can get into a trade. In this case, it would have been a short position. And yeah, this is pretty much another trend continuation. Of course, you can always reverse at important levels then, but this took place between the 21st of June and the 22nd, actually, quite a short period. But you can also see on a larger picture then that we actually continued that downtrend for a moment, but then we actually moved into an upside, and then you have an ascending triangle here. But really good setups for breakout trading. Showed you 2 examples here of descending triangles, good trend continuation patterns. Never guaranteed to work out, but very, very reliable trend continuation patterns. Descending triangles in a downtrend and ascending triangles in an uptrend. Always try to combine them with different indicators like moving averages as well. That is useful, and you can also take into account the MACD and the RSI. And I talked about these on this channel already. So hopefully you liked that video. If you did, please smash the like button. And if you want to follow me on this technical analysis journey, then please subscribe. Thanks a lot for watching, and see you in the next video. Bye.